Well, I think in traveling around Brussels and other parts of Europe in the last year, we've had three main criticisms of the CMU1, and that was firstly the narrative. It was not clear what people understood CMU meant, what it was supposed to achieve. So I think we will need to strengthen that narrative, make it more understandable what the benefits of a capital market are. We also received messages that our prioritization was not clear, and it is true, we had many actions in the plan that was unavoidable. But I do think we need now to identify more clearly those areas where we really are going to work and going to achieve important things. And then there's an issue around ambition. We have typically, defined ambition in terms of deadlines. So the faster you go, the more ambitious you are. But actually, ambition should be defined in terms of where you work. So are you working on the fundamental issues that are important for capital markets, like insolvency law, taxation, supervision, those kind of places? At the same time, there are other issues around frictions between national markets that have to be addressed and can be addressed in the shorter term. But it's important that when we speak of ambition in capital markets, people understand that it's really about where you're working and are you working on the fundamentals. So these are the sort of messages we'll be sending into the HLF. They, of course, are free to use those messages as they wish. But I think that's the sort of outcome we'd be looking for: an improvement in narrative, stronger prioritization, and an ambitious agenda. Well, I think the EU markets are very open. We often hear criticisms that they're not, but they are very open. We have equivalence arrangements with more than 200 jurisdictions around the world, and we will continue to use equivalence going forward. We are, of course, revamping our equivalence approach. This is not in any way to suggest we're going to be more closed. In fact, it's to allow us to remain more open. In particular, we're going to monitor equivalence more intensely so that we can spot any possible problems in advance and then avoid problems down the line. So this monitoring is not a prelude to removing equivalence. In fact, it's a condition for keeping the equivalence in place. And of course, we have to mention Brexit here. We will use equivalence and regulatory dialogue as a means of maintaining a close relationship with our partners in the UK when they become a third country. So I think any fears there are that the EU market is going to become more closed are not really well founded. Well, here it is really a question of developing the sector in a way that is attractive to retail investors. And there we have to look at a number of aspects. First, the market is very fragmented, which means that in any single member state, the levels of competition are lower than they might be if we had a larger market. And that is reflected in issues such as choice for retail investors and costs for retail investors. So we have to find ways of increasing competition and driving costs down. As I mentioned in my presentation earlier, we did a study earlier which showed a very wide variation in fees, and that simply isn't acceptable in a single market for capital. So I think these are the two ways that we need to do it. We also need, of course, to make sure that retail investors have the information they need to feel safe when they make those investments. We have put in place the PRIPS. We think in general it's a good framework. We are aware that there are some concerns about how it's actually working. We are listening to those concerns, and we will come forward with, first of all, targeted adjustments, and then followed by an overall review of the PRIPS framework. But the important thing is to have less fragmentation, more competition, better cost structures, and adequate information. And I think on that basis, retail investors will feel more comfortable entering the market. I think we need to understand that the industry and us in DG FISMA, we are part of a bigger game now, which is this need to reach carbon neutrality in 2050. So we all have to play our part. 30 years seems like a long time. It is not a long time when you see the challenges we have ahead of us. So in a sense, we all have to work together. We have to give the framework which will allow investors to make choices that are green and the industry has to embrace that framework and make sure that those choices are available and that investors feel comfortable making them. I think if we do this together, we will make a success of this.